Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, the 14th of February, 2022, Valentine's Day. Happy Valentine's. Now, I know for me, I'm going to go shopping for my wife's Valentine flowers tomorrow. They'll be on discount. I was looking at flowers, and I almost fell over. I mean, 6 flowers in a vase, $55. A dozen flowers in a vase, about 100, and then if they put in a few more, it was 135. I think that's a little bit crazy, but that's what the flowers run right now, and that they goose you and they get you. Wait for the discount. It'll be tomorrow or the day after. Walk into the store, and you're going to be a good guy. All right. Let's talk about what's going on. You can't possibly second-guess these markets. They're all over the board. The events of the world are happening faster than you can keep up with them. German Chancellor Scholz went to the Ukraine, and in all honesty, he did something fabulous. He got the Ukrainian president to actually say maybe they have to rethink what they're doing there. Maybe they'll never get into NATO, being how the Ukraine is situated on the Russian border. And if they do away with that, will that appease Russia? Now they don't have that issue staring them in the face of a NATO member right on them. It's one thing. He might be able to bargain away and say they won't deploy missiles. But whatever he's doing, he got the ear of the Russians. They've agreed, let's talk. Tomorrow, the German Chancellor is flying to Moscow, which means no invasion tomorrow. They're not going to have him fly there and meet with President Putin at the same time they're attacking. I mean, Japan did happen, but not the two heads of states meeting when that took place. And that's what I say. I don't think tomorrow will be the day for anything. The problem with the Ukrainian situation is if they go that route that I just said, and they say, no, we're going to give up the thing to join NATO, they have to change their constitution because it's in their constitution that they will try to do that. Maybe it's a dream that'll never materialize, and if it's that big of a thorn and you're surrounded by 130,000 troops ready to step on you, the sea closed off, maybe you give up those ideas and you say, okay, nobody has to die. We're not going to be a NATO member, but we'll keep our independence. We'll run our country. I am not saying that's the right thing. Please understand that I'm explaining the situation, and that's where it ends. Whatever they want to do is up to them. With that tonight, you're reversing course a little bit in the bonds and the notes, getting a bid, stable in the stock market. Gold is still up. I think gold has still got the inflation tailwind pushing on it, but now you're breaking back on that, all this news late, and on the energies. That's where you're at in these markets. When you look at the S&P, you can't get away from the fact that the market has continued down, and for the week going into Tuesday, we're down 0.25% for the week, nothing big. I'm going to get rid of these lines for you tomorrow. There's no point in keeping them, but these were the Fibonacci numbers that I showed you, and here's your percentages, 38, 50, and 62%. You can see how the market off that low rallied into it. I was telling you I thought the market was going to fail in that zone. I thought it would fail close to the 18-day average. You'll see it in a minute. And as it turned out, it was correct. So now what do we have? Well, we have a market that's got no trend. It has a higher high and a lower low. A downtrend would be lower highs, lower lows. You don't have that. Second, here is the 100-day average in green, the 18, and the 200-day average. You do see how the market got into those averages and fell away from them. Okay. When you look at Bollinger Bands, you haven't hit either of them since all the way back here, literally middle of January, and that's a month ago, and you're just sort of meandering back and forth without a trend. If you're trying to do this trade, it's the day traders that are picking up money in this market. It is not the position traders. How do I know it? I run a division of the brokerage firm. I see everybody's positions. I get to know what they're doing. When I look at the slow stochastic for momentum, it's down. The bias is down, you're not trending, and you got back under these key support levels of this moving average. So on rallies, I would look for some resistance between them and the 100-day average on the upside. In the NASDAQ, same thing, no trend. You have a higher high, lower low. The resistance showed up at the 200-day average, fell back, stuck in there for a couple of days, 2 days, between the 18 and that, and it's backed off. But it's not trending. It's a whipsaw market. The Dow, not trending. Higher high, lower low. Trending is the Russell. The Russell is suddenly the strongest looking of all of the indices. When's the last time you heard me say that? A year ago? I don't even know. But I'm saying it. Higher lows, higher highs. Now, it did hit a profit objective, and it backed away right away after hitting that band. Why am I bringing this up to you? On the Bollinger Band, you'll see at the end of this, I talk about my enhanced Bollinger Band course. Folks, you will have a big degree. Take this. I think you're going to learn something. And let me stop here for a minute. Just dawned on me. We're not doing a chat room this week, so I'm looking at other things. I was going to do some special reports, but I want to finish up a course that I have on outside days. So that's why I'm not doing too much right yet. It'll be coming. Okay. So I think the pros are buying it there. I personally don't like the risk all the way back here. It looks like a little bit. It's several $1,000s. Too much money to risk. But what's happening? All of a sudden, the Bollinger Bands have narrowed in, and they're making the market starting to go sideways again. Sideways areas create big opportunities when the market comes out of them. You can see what it did here, and then the break happened when you came out. The more it can narrow in, and the longer that goes on, the better the ultimate trade. In the VIX, come on. Look at how beautiful. You didn't even try to break through all the support. When we were coming down to it, I was telling you, I think the pros are going to try to find support here. And if they do, how could that be bullish the stock market? And I know I was saying that in these tapes. I said, if it holds here and starts up, you can't be bullish the stocks. And you tell me what has happened, and the stock market broke on it. Now, if you ran what's called a window envelope number, which I don't show here, it's in my morning subscriber video, you're at a zone where that is the resistance. You may not hit the upper Bollinger Band. I think it's right there where the pros are coming out. If you have window envelopes and you know how to use them, great. My subscribers get the way that I do them, which is different than the typical way, and I give them the numbers throughout the trading day to put on different markets, 40 of them. If you look at the 30-year bond, do you want to sell into a Bollinger Band? I'll give you the secret. Never. Did you hear me whisper? Never. Let the other sucker do that. You'll generally get an opportunity if you want to sell it better than selling at or under a Bollinger Band. I'm bothered that you're still oversold. The market's not really doing too much. It's in a downtrend. I don't like oversold conditions. Same thing in the 10-year note. Don't like an oversold condition to sell into. You were running the band. Now you're gradually moving to the right-hand side. Sometimes that's a prelude to a market wanting to get back up to the 18-day average because you're letting pressure off the market. Is it a buy? It is not. The question is how to get short and where to get short if the market can get you away from that oversold condition. In the dollar index, you have a pattern of a lower low, a higher high. I think you'd agree. When we were down here at the 100-day average, I said, folks, that looks to me like a pretty important number. Then you had an outside day up, and you finished up on Friday with actually a buy signal because you were over that number. And now you're just sort of trying to get some upside momentum. No follow-through bothers me. If the dollar's going up, then the euro's going where? Down. Just the way that it's going to work because of the weighting of it. I think you have downtrend, lower highs. This is a wrong arrow with all this action. I see why I did that. Now I got it. Outside day up. Remember I told you I'm going to teach you this, how to work with outside days. Take out this low. I think you're going right to the 18-day average of closes. Boom. you'll learn how to play with that, and I give you all the little steps for it and how to come in at maybe a number that's a little better than selling under that low. But that'll be all in the course for you. In the British pound, well, you've narrowed into this sideways action. You're riding right here, and again, you don't have a trend. You got a lower and low, higher high. You have this outside day up. You take out that low, you're instantly into the 100-day support, and now the market's bouncing. Impossible to trade something like that from my perspective. Bitcoin, correction mode, got overbought, hit its upper targets, the Bollinger Bands. Those Bollinger Bands, if you learn how to work with them, it will open your eyes up to a new universe as to where to come in, come out, hold on. What do? I teach it in my charting course on it. Now we get to the differential between Brent and WTI. And at this point, I was asked today, I was on Bloomberg TV in Canada. Tomorrow I'm actually going to be on Sky Business in Australia. And I was asked, what about Russia cutting off oil? I go, well, why not take a gun and blow your foot off? And they're going, why? I go, because they need the revenue. And at the end of the day, this is about the Ukraine. It's not about Russia hating Germany or other members of the European Union. It's got its issue with the Ukraine, right or wrong. And they're not going to do something like that to shut it off and hurt those countries. That doesn't mean that NATO can't shoot itself in the foot and say, if you invade, we're not going to buy your oil. That's different. But do I think that Russia will cut it off? Not in your wildest dream. Not even remotely. The goodwill from that, hey, we kept the oil going, you didn't want it. Very different than we're not giving you the oil, now you can't trust us for your energy needs. Agreed? You got to think that way. Putin comes from the KGB, folks. He's not an idiot. He's a smart man. And he knows his power plays. He knows how to push them. And he's succeeded. He's got Crimea. The world let him take it. That's why Ukraine is in the position it's at. NATO's not stepping in to fight that war. Higher lows, higher highs, riding that band. And again, the question is, I'm already down the road, and people are asking where I think about oil. And I said, as COVID is ending, and it is ending, as this wave ends, people want their jobs, they get back to work, the goods start flowing, the economies pick up, and we got spring and summer coming. You've got a lot of demand for energy. And none of the producers that say they can increase that production have done so to the point where they're able to meet that 400,000 barrel quota a day that they keep saying will give you more and more. They do about 60% of it. That keeps a bid in this market until there is no bid. We then get to the heating oil. Same thing, but hits the upper Bollinger Band. I know what I told my subscribers because in the morning videos, these were buying opportunities, and I was mentioning them to my subscribers. And upper Bollinger Band is also the areas that you start coming out. Now we get to the nat gas, and it should have some problems right here. Nat gas has a bigger issue. As winter ends, summer doesn't begin. You go to more moderate spring weather, right? And that's less demand for this expensive natural gas right now. Things you got to think about ahead of time because it's called a futures market. It doesn't wait for it to occur. You got to figure out what's going to occur, and then the market moves towards that. I want to remind you, you keep hearing me talk about Bollinger Bands. Please take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.